These were the top 10 stocks I traded last year. And I think they account for like 65% and 63% of my gains or something like that. It just goes to show you don't need to have 100 stocks that you're trading to be successful. You can just trade these few stocks. You can get 100% return just trading these. At the beginning of last year, Broadcom, like I said, there was a big chips theme, semiconductor theme earlier in the year last year. It had pulled back and, had made this kind of little bit of a turn here. So I started buying here and it came out of here. So I bought 500 shares here at like 1,080 thereabouts. Next day, it went over the high of that day, the previous day. So I added on another 450 shares at 1092. So I paid more, but it looked like it was going up. The next day, it opened above this high of that previous day. So I bought more. I bought 400 more at 1,000, 1,108. You need to definitely believe in your ability to be successful in trading and, believe that you can make 100% plus returns in the market. You're not going to do it every year, but, the years that are strong years in the market, you should be able to do that. And you got to believe that you can do it. I think you do need to have rules, but you need to keep them simple that you can kind of remember off the top of your head. The one rule that you can't really change or move out is use stop losses. And, that's kind of the key. If you want to be aggressive and you want to take outsized positions and try to really, swing for the fences, if you will, you got to use stop losses. That's the one non-negotiable. Yeah, I'm a big fan of that. Like if you see the shakeouts, like in a chart that's forming a nice pattern and it's been tight, like that's something you want to look for because that's a good clue that this thing is, it could be ready to go in the next, week or so. So
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support and sit back, relax, and enjoy. All right, welcome back everybody to the TraderLion podcast. I'm your host, Richard Moglen. Joining us today is Deepak Uppal, top performer in the US Investing Championship, both the prior year as well as this year again in the Money Manager division, $1 million plus category, achieving a triple-digit return once again. We'll be covering everything, his style, going through key trades that he made this year, and really diving deep into the details and key takeaways from last year. Deepak, thank you so much for being here again. A pleasure talking with you, at the conference, the last time we did this as well, and I know this will be a lot of fun. So thank you so much for your time.
yeah, no, I appreciate you having me come on there. I love doing these things and speaking with you is always a pleasure. So thank you very much.
Of course. Well, I know you prepared some really good slides, so let's go ahead and jump right in. And I know we'll touch on a lot of different subjects. And everybody watching, definitely stay tuned. This is one where you're going to want to have your notebook ready for some really good golden nuggets. So let's go ahead and dive right in.
Great, thanks. Yeah, I did a few slides, and as we go through this, feel free to ask me questions, Richard. But what I was going to cover today is, how I go about making triple-digit returns in the market. So that's kind of the subject of the conversation. Um, so just by way of introduction, if you haven't heard me talk before, I've been trading for over 30 years, been in the market probably since the early 90s. And I learned to trade the hard way. I always like to say there wasn't a lot of stuff out there for me to learn from. I kind of just trial and errored it, did everything in the book. You read all these trading books and what you shouldn't do. I probably did every single one of those things. Changed my style all the time. Did options, did currency, did stocks, and also everything in between there, right? So learned it really, really the hard way. It took a long time, but you know, finally got grounded and listened to folks that had learned how to do it correctly and followed and learned from them. and got me to where I am today. So I need to thank all those folks as well along the way that helped me out. I'm not a trader by profession. My background is in management consulting and in software sales, technology sales. I became a full-time trader in 2023. It was, a point where I felt like, I had learned and it was time for me to kind of go off on my own and try to do this as a living. And so far, touch wood, it's been successful. Um, and I was just going to say, for folks that first time listening to me, I've done a couple of interviews that Richard mentioned earlier last year. One was early, I think in January, February, on how I got my results in 2023 for the USIC, and then during the TraderLion conference last year, I did a section on risk management for consistent returns.
And that presentation I think was one of my absolute favorite from the conference. So we'll link both of those videos down below. Really recommend checking them out. Really good stuff in there. So if you enjoy this one, watch this one first, and then if you want even more Deepak, go ahead and check those out. All right, cool.
Thanks. Yeah, so just by way of, last year I joined the, USIC Investing Championship. I went into the $1 million division last year. I had success. I was at about 153%. I want to say congratulations to everyone that was in the competition last year that had positive returns, and especially the folks that are listed here that all did triple-digit returns. Wasn't the easiest thing to do, but they all persevered and did a great job. So congratulations to all of them. On the right side, you can see kind of my equity curve for last year as part of the account that I had in the contest. And as you can see there, I mean, I did okay. Like I was kind of just hanging in there till August, and then, if you remember last August, we had that big correction. The market kind of bottomed, and then it kind of just started to take off. And as you can see, my equity curve, really took a nice swing up because the market was doing well, right? With the presidential election and everything, I mean, the market was just humming. So as I go through this, one of the things that I'm going to talk about is that, you really need to understand where the general market is. I know a lot of folks say it doesn't matter what the market's doing, but you got to kind of keep track of where it's at and what it's doing, just because if the market's going, a good market lifts all boats, if you will, right? So why go against the grain there? And then you can see, I had quite a bit of a pullback there towards the end of the year. And I'll talk a little bit about it, but some of that was just I was getting very, very aggressive at that point. And it was during the time when the Fed came out and basically turned hawkish, and the market tanked for the next 2, 3 days, and that was kind of the result of that. But net, I would say it was a good year. That was a good learning experience for me as well, of not getting too aggressive at the wrong point or during key announcements in the market. So, but I'll talk a little bit more about that as we get into it. Just results from last year or from 2023, the year before, when I was it was the first time I did the competition, and I ended up at 259%, fifth place. But the interesting thing here is if you look at the equity curve, it's a very different looking equity curve than what I did last year, and that's a true result of the market. And I don't know if you recall from back in the end of 22, getting into 23, we were just coming out of the bear market, and things were just starting to go. And you had to jump on it early. The first few months were okay, they were decent, but it's really that May to August timeframe where things just really, really moved a lot. And it's at those times where that's where you make your returns, right? I mean, you need to be aware of what's going on, and you can't be scared of jumping in and just kind of riding that wave like a surfer would, like right when they've got a good wave going. So,
And Deepak,
um,
do you subscribe to the idea that there's kind of 2 to 3 really good periods each year around where that's when you want to be aggressive and that's where you make the majority of the progress, and then the rest of the year, we're consolidating, we're chopping, whatever. It's just not quite right for a swing trader, momentum style trader, which I know you are, to be pressing on the gas all the time. Do you kind of agree with that?
100%. Yeah, 100%. I agree with that. I was going through some of my numbers and just, monthly kind of what I did. And, it's interesting because, you're like, just lately, when you look at January this year, January and part of February, early part of February, we were just chopping around, right? Like you weren't able to make a lot of progress. And, when the results came out for for January results for the contest, right? I mean, you look at it, people were struggling and you could just tell, like, very low returns. I think someone had 23, 24%, 29 maybe. But, it was tough sledding here and it was just all chop. And that's not a good time to make money. And it showed in most people's accounts and showed in my account as well. But yeah, 2 to 3 times a year, I think, is when it happens and you got to take advantage of it.
Yeah, and in the prior interview we did last year, you talked about this drawdown that you had at the end of 2023, kind of the reasons for that. So again, a plug for the prior video. I think there's some really valuable stuff there. With these interviews, we try to keep it honest, the good, the bad, the ugly, all of that. And I think what you talked about there was something that every trader goes through, and can be really valuable, especially for learning traders to understand and hear from a more experienced trader's perspective. Everybody experiences drawdowns, points where they're not trading at their best, and you just have to try to minimize the drawdowns as much as possible.
Exactly, exactly. And that takes some time. I think there's some things out there that you can follow that, like the presidential cycles and composite cycles that are out there. They kind of give you an idea. You don't want to trade off of those, but you kind of get a feel for when they're typically the good seasons, bad seasons based on the year it is and all that. So those are some things that, I've kind of just started to look at that more and more and getting myself familiar with it. And, hopefully that'll help me out from giving me the high level roadmap, if you will. It's not something that you would trade off of only, but at least you get some sort of feel of where typically the markets are going every year.
Yeah, and one question about trading in 2023 versus 2024, with the change in your account size and increasing that quite considerably, does that impact your style at all, or you're still able to kind of do the aggressive style swing trading that you talked about last year as well, when you're in the 20K division? I don't know,
Yeah,
did that impact things at all?
that's interesting. You asked me. I get asked that question quite a bit. So, I'll say this. I think it impacts what you buy and what you sell. I don't know if it impacts your style.
Mm,
So for me, whether I'm trading the $1 million account or the $20,000 account, it didn't. I'm still doing the same thing. I'm trading the same way I trade, my same rules. Everything's the same. It's just that, for me, I'll give you an example. Like, you look at TEM, like, what is it? TEM, the stock,
Tempest AI, I think is the full
yeah,
name. Yeah, yeah, yeah.
yeah. I forgot what the name is. I just know the symbol. But anyways, it's like one of those stocks that Tempest.
Yep.
So Tempest AI, right? Like if I was in the $20,000 division, I'd buy that all day long, right? I mean, it's just a good stock. It's gonna move. It's a, momentum stock. I would trade that. I would buy, 1,000, 2,000 shares, which would make a big impact on a $20,000, $30,000 account. But the problem with the $1 million account is there's no way I'm buying 20, 30,000 shares of that stock at $20. That's so volatile, right? I mean, you can just go the wrong way and then you're kind of dead. So what changes for me was I had to buy more liquid stocks as well as I focus on the stocks that are, more than 75, $100, because I could buy 2, 3,000 shares of that, which is good. And usually those stocks aren't going to, I mean, they can move 10%, 15% in a day, but it's not as typical of those unless there's some big news or something coming out with earnings or something like that. So
Right.
yeah, so that I think is the biggest change, is that the type of stocks I focus on were larger stocks, but they were still momentum stocks.
Hmm. Perfect.
Um, Moving on. So how do I achieve triple digit returns? As I sat back and thought about it for this interview, kind of what are the things that I really focused on to get me to triple digit returns, over the last 2, 3 years. The things that I do is the first thing was winning in a positive mindset. That's number one. I think if you don't have that, it becomes very difficult to try to do what you want to do. Number two, create rules. And when I say create rules, I think, keep them simple though. Something that you can easily like count on a couple, on your fingers on one hand or something. Um, The next thing was, figuring out the market themes and the leaders as you get into the year. Concentrate your portfolio on those names and then identify good setups and entries to get involved, and then basically rinse and repeat. That's kind of how I look at it. And, I'll get into each of these in a little bit more detail, and hopefully it kind of resonates or makes sense to folks that are listening. So first of all, winning and a positive mindset. And this is really a journey into self-discovery because it took me a long time to figure this out. But number one is you need to definitely believe in your ability to be successful in trading, and believe that you can make 100% plus returns in the market. You're not going to do it every year, but the years that are strong years in the market, you should be able to do that, and you got to believe that you can do it. Um, I always give the example, I think I've told you this before, is that, when I went to Minervini, I follow Minervini quite a bit, and that's a good, I'd say, foundation of how I got started, and studied in terms of trading and becoming a more kind of formal trader, if you will, versus just kind of doing it on and, winging it, if you will. But, I went to his master trader program in 2017, and, there was like a few hundred people in there, and he asked, raise your hand if you think you can do 100% return in 6 months. And, I just instinctively raised my hand thinking, yep, I can definitely do that. That's why I'm here. And, he said, okay, well, there were three of you that raised your hand. And he goes, you three potentially have a chance to do it. And everyone else in this room, you're never going to do it because you don't believe in yourself. So, it's simple. It sounds stupid, but it really is true. And I think if you think about it in your own life, if you don't believe you can do something, you're not going to be able to do it. So, you always have to have that positive mental attitude and perspective in anything I think that you do in life. So trading is no different. Second thing is I think you can't be scared to lose money. It's a part of trading. And if you're scared to lose money, it's going to be tough for you to make money. And, the quote is, scared money doesn't make money. And so, if you're trading with money you can't afford to lose because you got to pay your bills with it or something, it's going to be hard for you to make money. You got to be willing to, put money into the market that obviously you don't want to lose it, but you're going to be taking small nicks and cuts and, losing money, especially if you're brand new, you're going to probably lose a lot of money. It's part of learning the process. So, I think that's also very important. You need to come in thinking risk management versus how much money I'm going to make every month, every year, right? That's, I think, a key thing. I think your relationship with money is also important. How do you treat your money? When you make money, are you going to be a little bit more loose with it in terms of, like, say you made, a 10% return? Are you kind of the person that's going to think like, hey, that's the house's money, so I'm just going to risk it and be a little more aggressive with it and break some of my rules? Or are you like thinking, hey, that's my money, I earned it, like you would with a paycheck, right? You're not going to throw it away. It's hard earned. You're going to keep it. You're going to respect it. You're going to try to figure out how you continue to grow it. To me, I think that's an important aspect of it. I think the other thing is, set targets for your trading. So at the start of the year, I'll set a 6-month target for my account, like in dollars, like this is how much I want to have in my account. And I write it down. It's on my whiteboard behind me, actually, in my office. And so, I've got a few accounts, and I said, here are my targets for the 6 months. And I make them aggressive but doable. In my mind, I think they're doable, but they are aggressive. And so, I'll look at them after 6 months. I'll see where I'm at, and put on the next 6 months of where I want to get to. So I think that once you write it down and it's there, it's staring at you every day, it helps drive you towards doing the right thing so that you can achieve your targets. And then the last thing I think is, you got to find your trading style, which I think I've mentioned before too, is that, that's really based on your personality. Don't try to imitate others, right? We're all different people. We do things differently. Our personalities are different. And so you got to figure out what's your personality, what's your risk tolerance, how do you like to trade, all those things. And don't try to imitate someone because you're not like them, right? You've got different um, personality traits that maybe those people don't have and they can do things, right? And so this was actually a big thing that took me a long time to figure out for myself was, what was my trading style? And so just like a real quick example, right? There's a bunch of styles out there. You can do buy and hold where you buy something like, you buy it in January and you're just going to hold it till like, September, October. And you're okay going through these ups and downs and you're totally fine with that. That's one way of trading, right? That's like the Berkshire Hathaway or Warren Buffett, I'm sorry, Warren Buffett way of trading, right? Or you could be a swing trader, which is more of like, I'd say what Mark Minervini is, a lot of folks that are on Twitter, it seem like they're more swing traders. I'm a swing trader. And swing trading can be, defined in a lot of different ways. I mean, it could be like you're holding something for a few days to a few weeks, right? I mean, but what you're trying to do is you're really just trying to capture these little swings in the middle that I've got highlighted here. Like that's all you're trying to do. You're not trying to double the stock price. You're not trying to get 100% return. You just want to catch that middle, the fat in the middle, and that's it. And then you'll wait for it to set up again and then go try to catch the fat again, right? That's what a swing trader does. Or you could be a scalper where you're doing it super quick and just scalping on some trades, or you could be a day trader where you get in the morning and you're totally in cash by the end of the day, right? So you got to define yourself like what kind of trader are you? What do you feel comfortable doing? And really, once you figure that out, like you should just stick with it. Don't try to change and switch between styles and things like that because the market's different or whatever. So I think that's an important part of aspect of like learning, your style.
And Deepak, do you mind going back one slide? I've got one question there about that. When you talked about thinking through your relationship with money, do you mind expanding on that a little bit and what you mean? Because I know some traders, especially competing in the USIC, they try to build up that cushion early on the year that then they feel more comfortable becoming more aggressive and they've kind of got money to work with and risk to become more aggressive so they can get triple digit returns. Is that kind of what you mean or is there a little bit more nuance there?
Yeah, I mean it's kind of that's part of it, but also like I'd say like it's more of like, do you have the attitude like it's the house's money?
Mm.
And I can just kind of, be more aggressive or change my style with that part of the money that I've gotten, right? So like you said, like in USIC, yeah, I mean it's a contest, you want to try to win it, so you do some things that are a little bit more aggressive maybe, versus like if you have an account that's not in there.
Right.
And you feel like, you deserve to have the money, right? Like revenge trading, all those sorts of things, right? Like, oh, I don't deserve to win, and then you go out and put some crazy trades on that don't make sense, and things like that. So it's really around, how do you view the money that you're making in the market? A lot of people think, hey, it's easy money. I can do differently with it than money that I'm earning with my paycheck.
Yeah, I well said. And I think the first bullet here I think is really important too, and I like that you put that in there. And this is kind of why I like doing this podcast is I get to talk each year and kind of showcase traders who have been there and done that and showcase the people watching that if they put in the work, develop their process, develop their setups, manage risk, all of that, there's no magic secret that's keeping them from making these 100+ returns, like you said, in a strong market that they can 100% go and do that. They just have to put in the work and get to that level. But anybody can do that, and that's what's so cool about trading. But I love bullet number one. I think that's really important.
Yeah, and you know what? One of the things that really has helped me is, joining the USIC, right, every year. And I find that it kind of just it puts you against other great traders that want to, go out there and trade and get triple digit returns or, show how good they are at whatever their process is. I mean, they may be buy and hold folks. They may have a totally different trading style, right? And when you go through and you see who's won or who's been in the top 5 or 10, over the last few years, they've all done it differently, right? There's no one magic bullet, but it's fun to do the USIC because you're putting yourself up and you believe in yourself that you're going to be good enough to compete with these folks. And that's part of, I think, the beauty of it. And I think from a mental and a positive perspective, thinking perspective, it helps out.
For sure.
So yeah, so that's the style that you have. So create rules. So this is something that, I kind of say, I'm on Twitter or an X and, you read stuff and I'm on a couple other um, WhatsApp groups and whatnot. And what I find in there is that people talk a lot about the rules and, well, it didn't meet this criteria, it didn't meet this criteria. And they've got like, seven or eight really strict criteria they're trying to meet. And I think when you're trading, you wanna have rules, but you want them to be pretty simple and quick because as you're trading, you're not going to sit there and calculate 40 different things, especially if the market's moving quickly, right? Because by the time you get in there, you've already given up 4% or something on a trade potentially. So, I think you do need to have rules, but you need to keep them simple that you can kind of remember off the top of your head. The one rule that you can't really change or move out is use stop losses. And, that's kind of the key. If you want to be aggressive and you want to take outsize um, positions and try to really, swing for the fences, if you will, you got to use stop losses. That's the one non-negotiable. And that's the one we were talking about earlier where we did, where I spoke about that at the conference. So, it'll be out there if folks want to listen to it. It's kind of lengthy. I think it was like 2.5 hours or something like
For
that.
good reason though. It's worth the
Yeah,
listen. Yeah.
yeah, I've gotten some good feedback from that. So that's something if you have time, you may want to try to listen to it. So that's one non-negotiable rule that I have. The rest of them are all pretty simple. Keep prices over the 200-day moving average and generally over the 50-day moving average. I want them both to be in uptrends, 50 over the 200. I look for stocks over 75 bucks. So anything below that, I usually 90% of the time won't even look at them. So that cuts down my universe quite a bit. Average true range, which is the amount that a stock moves during the day typically, which is called ATR. I usually look for stocks that are 3% or higher because I want the volatility, the momentum, I guess, if you will. I want to focus on specific industry groups. I look at only tech stocks. I look at ETFs, consumer discretionary retail. No-nos for me are biotech. Never, we'll trade that. Energy. What else? I won't trade metals, mining, any of that stuff. I won't trade any Chinese stocks, which, have been doing pretty well. I'd say over the last, since the beginning of the year, you look at BABA, PDD, or whatever, they've done really, really well. But even though they're doing well, I don't even look at them. I don't trade them because that's just my rule. I've gotten burned on them too much. And so it's a rule, and I try not to break that. So understand the market. We talked a little bit about this was, you need to understand where the market is, the S&P, the NASDAQ, what's the location on the chart, what's the trend. Um, I think I mentioned it earlier as well. I'm starting to get into more composite cycles, presidential cycles to see kind of what typically happens in an election year, post-election year, second year of the presidential election and kind of see at a high level what things are should look like or potentially could look like. And then if a trade isn't working, sell it and rebuy it if it turns around. That's an easy one. If it's not working, don't buy more. But if it is working, if it's not working, you can always sell it, right? And you can buy it back. That could be you could buy it back in a day, 2 days, a week later, or you can buy it back an hour later, right? You sell it and it's like, oh shoot, it's turned around, and you buy it right back. So why risk going down further when you can always buy it back? Um, and then typically, I sell before earnings. I usually don't hold anything over earnings just because it's just too volatile. Even if I have a cushion, I like to just get out of it and just leave it versus trying to play around with it. Sometimes I'll hold a little bit, but more often than not, I typically get burned. And you also need to know kind of what's the market been doing on earnings reports, right? Like, has it typically been um, punishing folks even though their earnings have been good or they've been okay with them and sending the shares up even if they've missed on a few things. And so you can get a feel for that every earnings season, kind of what's going on. And then the last thing is know your math. That's an important part. Know your numbers. You should be able to kind of rattle off your numbers pretty easily of what amount of risk you're taking, what portfolio risk, trade risk, et cetera, that you want to take and have that kind of in your head.
Yeah, this is nice. You can fit it on an index card or obviously on one slide. This is great. And this is the key
Yeah.
principles here.
Yep. And then, when I say know your math, again, keep it simple. So, here's kind of what I do. Portfolio risk, 7 to 8% of my portfolio is at risk at any given time across all trades. It sounds like a lot, but, I mean, if I lost 8% or 10%, it hurts, but it's not the end of the world because I know I could make that back pretty quickly once the market is in a good spot or, you know, things are lining up. Keep a single trade risk low. I think 1 to 2% of my portfolio max is kind of what I try to keep it at. And that doesn't mean like I won't go to 3 or 4 depending on the trade I'm taking. But, overall portfolio risk, trying to keep that at 7 to 8%. I talk a lot about this in that risk management interview that we did.
Mhm.
And then, I try to get a 2 to 4 R on a trade. And I just have this little silly trade tracker that I put together that's just on an Excel sheet. And, basically I put in as my value of my portfolio increases, I'll update that. If it's $1 million, 1.4, 1.3 million, whatever, I'll do that. I know what my max loss is, and I know where I am in terms of our profit on those trades, and I can kind of, make a decision whether, based on how the market conditions are, if I'm good with just even taking a 1 or 1.5 R on a trade, which these days would be like, huge based on how the market's been lately. But just a quick and easy way for me to kind of just track where I am and what I'm doing.
Yeah, and for folks who maybe aren't super familiar with this, an R just means a risk multiple. So you can see the max loss there, $10,000, then one R in profit would be a gain of $10,000, and you can track your trades and your statistics using this. And Deepak, do you track this on a monthly level or weekly level, like how many R's you've gained, or you don't think about it too much like that?
I don't think of it too much like that. I look at it more just from a trade perspective. So if I'm in a trade, I'm looking at it and just saying, okay, what R do I have?
Gotcha.
I haven't gone back and looked at kind of my overall R, overall across a month or a year or anything like
Right.
that. Good idea though. So that's that. The next thing I talked about was, I think here's an important thing, what are the key themes and who are the leaders in the market? And this is important, to pick up on these quickly, right? And so for last year, as I look back, to me, I think the themes were Bitcoin, obviously, AI was a huge theme. The Mag 7 was a theme, weight loss drugs were a theme. And then, I just put market in there because I tend to trade a lot of market indices depending on what's happening in the market overall. I won't I trade the market. It's easier for me to trade the market when things are not going well versus trading individual stocks because the volatility is just going to be crazy. And so, identifying these themes and identifying who the leaders are in these categories, I think is important. There was obviously several more stocks that were out there that did well. I think, like some of the you know, like Netflix and, some of these subscription um, stocks like Duolingo and Spotify, I think, those were in there as well. Like just identify those key themes and then identify who the leaders are in those themes. You don't want to why go with the second best or third best? Go with the leader if you're in on them on time. Pick up on those themes quickly and hit on those and stick with those as time progresses. Like AI, I think moved from, we were very much into the chips and what are the chip stocks and the semiconductor stocks, right? And then from there it went to a lot of like, like SMCI, like who's doing the cooling for all these racks and this infrastructure. And then from there, it went to who's going to power it, right? So you got into VST or GEV, and technically they're energy names, but I kind of considered those were moving not as an energy name, but because of AI. And so, some of these things will move around. Like this year, I think, the theme is obviously it's AI still, but I think a lot of it's going to move as we get into the year around a lot of the software AI names, I think are going to be the ones that are going to be doing well this year. At least that's what it was towards the end of last year and early this year. But obviously, we're going through a correction right now, so we'll see what ends up coming out on the other side once we're out of this.
And were these some of your most impactful trades from last year? Is that why you're kind of listing these out? Okay. Yeah.
Yeah, these were the impactful ones, and these were the leaders that I kind of focused on
Mhm.
last year. So there was, obviously a lot more, but these were, I think, the key ones that kind of helped me out last year.
Yeah, and it's funny how you mentioned kind of the evolution of the AI theme. Like you said, it was chips, then it was, infrastructure, and then now it's kind of like application of AI where PLTR was the key leader, Duolingo was the key leader, and like you
Right.
said, we're pulling back hard now, but it'll be fun. It'll be interesting to see how that develops once we come out of this correction, whenever we do so. What will be the leading theme within the AI kind of larger theme? That'll be interesting to see.
Yeah, and like I said, yeah, these themes will kind of,
Come and go.
they'll morph. Yeah,
Yeah.
exactly. So, and if Nvidia has great earnings tomorrow, you'll probably see, semiconductors right back at the top of it, and we'll see kind of how things go. But, yeah, you need to have a good feel for what's going on in the market, I think. And for me, the big thing is like I'm a big believer in I like to trade in names that I kind of understand kind of how they trade. I know they go up in the morning, they pull back in the afternoon, and then they go back up, towards the end of the day and they continue their uptrend. And I know that how their volatility works in general. So I like to trade in stocks that I know, and I don't like to jump around to like, hey, here's the new hot thing. I'm just going to go look at that and go trade that for a while and then jump back into these. So it may hurt me at the end of the day, but that's just kind of the way I like to trade, and I feel comfortable doing that. And
Mhm.
so that's like one of my, if you will, rules that I do.
Yeah, and from a high level, when one of these themes is kind of developing, what are you seeing that gets you interested and gets you trying to find the leaders within that theme to then add to kind of your smaller universe of names that you focus on and come back to, like you said. So how do you kind of identify developing themes that could, be pretty significant and that you want to focus on and then try to find entries within an ETF or relevant, stock within that theme?
Yeah, I mean, I think it's not just one. I mean, one is, yeah, I mean, I read, Investor Business Daily, so they're always highlighting what are the big stocks, what's moving, what's happening. They give you a good overall weekly kind of theme of what's happening in the markets, monthly theme. I follow Mark Minervini. I'm part of chartpattern.com and stuff. So, I mean, some of those sources also I get some information, and then I'll also look at on a daily basis, like on my screens. Um, what's moving, what's happening. Like right now, when you look at it, the theme right now, but it's very defensive, is like, insurance companies have been doing well.
Yep.
Healthcare seems to be popping back, medical devices and things like that. And so that's the theme right now, but those aren't really things that I'm very interested in trading. So I'm not I'm not really investing in those things. I'm just sitting out and waiting until these things come back, and we'll see kind of what happens.
Great.
But though, I mean, so that's kind of where I find kind of what the themes are and what's going on. And you can tell, like, I mean, like I said, Investors Business Daily is going to be writing about this stuff all the time, so you can really quickly pick up on it. All right. I think once you have your themes, I think the other thing that I think is super important if you want to get big, triple digit returns, I think is, you need to concentrate your portfolio. You can't have six, seven, eight stocks in your portfolio that are, and that you're holding. I think, you can hold them for a long time, but the idea of getting the triple digit is you're trying to kind of, recycling your money, if you will, as fast as you can with the biggest profits that you can, and keep doing that over and over, especially during a good market surge. So number one, keep your portfolio concentrated and keep them in the leaders, right? No need to kind of buy something that's in the penalty box that's you think is going to turn around, that's sitting below the 200-day and the 50-day, that you're hoping will turn around and give you a big reward, because typically those things take a long time. And so your money's just going to sit there. If you have a portfolio, I'd say invest in 3 to 5 stocks max, right? And 20%, per stock, you could do that or whatever. And my belief is you don't need to be equally invested in those 3 to 5 stocks. Like you can be 70% in one of them that seems to be the strongest, right? And on the other ones, you're dialing back a little bit, maybe you're 10 10 10 or whatever. But and that can change, right? Like you could be 70% in one stock, it moves, makes a big move, you get a good return on it. You can, lighten up on that one, and take the money and put it in the next ones that are moving or buy something else, right? And so it's continuously you're trying to just make sure you've got the best merchandise in your portfolio um, at all times. And like I said, concentrate more on the stronger names. I don't really just set it and forget it in terms of concentration. You're always looking at it, making sure that things haven't changed. The stocks continue to move. You're looking at trend lines and things like that to make sure they haven't like gotten to a place where they're hitting resistance. You want to get out before that. Or if you've got a good R, if you got 3, 4, 5 R, you may want to just say, hey, that's good enough. I'm not going to try to get the last juice out of the lemon, and I'll just sell and go find something else. And then the last thing is, you can concentrate in cash as well, right? I mean, especially when the market's choppy or not doing well, sit in cash and just wait for the fat pitch.
And Deepak, I know we touched on this in the prior podcast that we've done, but how does how do you think about leverage as well with this, with concentration of your portfolio and divvying up slices of your portfolio to be invested in your top ideas? So I guess throughout the year, how do you use margin to take advantage of opportunities when the market's strongest, the stocks are strongest, the themes are strongest, and how do you tail it back when, like you said, things are choppier, downtrend, what have you?
Yeah, I mean, I definitely use margin in my account. I mean, there's a few reasons. One is, if you use margin, you've got access to like, if you're in a cash account, it's really hard to go in and out of a stock in a day, especially if you're trying to jockey in and try to get the right position. It's hard to like buy it, sell it, and try to buy it back, especially because then you don't have any, it's cash, it's a cash account and it takes a day to settle. So it becomes very hard to get these kinds of returns in a cash account, I think. Unless you're just kind of buy and hold and just leave it, right? If you're doing a lot of trading, it's going to be very hard. So I definitely use margin. And I kind of consider margin part of my account balance in general. I don't really think of it as something different. But I've been trading for so long, I've always had margin, so I'm very comfortable using it. I know some folks might not be. But it's something that you need to just, it takes time to learn how to leverage it correctly. And so for me, I just kind of consider it as part of my stash, if you will, that I can deploy. And in a good market, you don't ever have enough margin. But in a bad market, maybe you have too much margin sometimes. So it's a double-edged sword. But I just kind of, like I said, if I have $1 million portfolio and I've got margin, I can just assume I've got $2.5 million I can trade with. So it's just my mindset is like that. And I think also, I may have mentioned this before, is that with the new rules and everything that are out there, I mean, you can still get in trouble with margin, but you can't wipe yourself out, I don't think, with margin because they will come after you pretty quick. At least the big brokerages, they won't let you, they'll change the margin requirements. If you're like, if something requires 20% margin and you have 70, 80% of your portfolio in one stock, they'll change that margin requirement from 20% to like 50%, 60% or 100%. So they kind of prevent you a little bit from getting into trouble, but obviously you can still get in trouble. So it's a
Yeah,
dual-edged sword. You got to know how the margin works with your broker before you kind of start using it
right.
um, consistently. All right, trading leaders. So when I talk about trading leaders, I went and did an analysis. So these were the top 10 stocks I traded last year. And I think they account for like 65% and 63% of my gains or something like that. So it just goes to show you don't need to have, you know, 100 stocks that you're trading to be successful. You can just trade these few stocks and you could probably get 100%, you can get 100% return just trading these. The key is, these are the leaders. Number two, are they set up correctly when you're buying them? And as you can see, even in here, I used a lot of leveraged ETFs, like for MicroStrategy or for NVIDIA or what else is in there? And then I used the Qs, obviously, for the
Hmm.
triple Qs. So I use leverage on top of leveraged, which is a little crazy, but it's something that I've been doing for many years, and I'm pretty comfortable with it. Any questions or?
No, I don't think so. I think, like you said, I think what you said before is really important about, you're somebody who likes to be very familiar with the names you trade and stick within that universe, and it makes sense. And I think someone who I've talked about this similarly, Oliver Kell, he kind of is exactly the same way. He's coming back to the same liquid leaders of that theme, and coming back and trading them when they're in favor, when they're set up, all of that. So, yeah, but I think there's a key point to make that, you don't need to find so many outlier stocks. You can come back to the same names and just trade them effectively, and that can yield really strong performance.
Yeah. And I think the other thing is like, I think I mentioned earlier, like, I'm not looking to get 100% return on a stock. And a lot of people are like, oh, I want to get a 50% return on this. I want to get, and this was kind of an aha moment for me, which was, I think a Minervini video or something, or he mentioned this is that, hey, look, how many stocks double in a year? Like if you look at the whole universe of stocks that are out there, right? The 6,000 share stocks that are out there. How many of those double in a year? How many of those can you get a 50% return a year? How many of those can you get a, 20%? And then, kept going down like, 10%. A big chunk of them will go up 5%, right? So why not play where there's a higher probability for you to be able to get a 5, 8, 10, 15% return versus trying to get that, 100, the double on one stock. It's going to be very hard. So, that's why kind of as I develop my trading, because I used to be like that. I want to get, and I'm going to hold this until it doubles or whatever. But that's how I kind of started figuring out what's the best approach for me. And which was like, hey, if I concentrate, buy a lot of shares in a stock that's 150 bucks that can move up 5, 6, $7, $10 in a day or two. Um, and I'm concentrated with a few thousand shares, like that's a big impact on my portfolio. And the chances of it doing that are probably pretty high if I buy it at the right spot. And if I use tight risk management, hopefully I won't get burned. And, why don't I just do that over and over, right? Like that's a lot easier, I think, for me to do. Yeah, you need to be in front of your screen and watching things, but it's an easier way to do it for me than it is for me to buy like a stock and then just hold it and wait for it to, go up 30%.
Yeah.
And there'll be a lot of ups and downs. Like, you look at these charts, right? Like this probably is a 30% move here, but you got to sit through all these little swings up and down. And do you want to do that with a high concentration?
Right. How many trades do you know offhand that did you make last year, and maybe comparing that to 2023 as well?
Yeah, I mean, I think in 2023 I did like 160 or 170 trades in general. And when I say trades, those are trades, but like
Complete. Yeah. Yeah.
yeah, there's a lot of like little slices within that. And I would say last year, I think I did probably a few more. I don't know the exact number. I probably did like 200, but there was a lot of little trades in there, buying and selling, holding, and things like that. So, I'd say that's about accurate is about 200 probably last year.
Cool.
Yeah, so now I'm going to just get into some of the stocks. I mean, I've got a handful here. I don't have a ton of them, but here's an example of something, and hopefully you guys can see this. The numbers are kind of tiny, but like I traded Broadcom right last year quite a bit, but here's at the beginning of last year, Broadcom, like I said, there was a big chips theme, semiconductor theme earlier in the year last year. It had pulled back and had made this kind of little bit of a turn here. And so it broke this downtrending line here that it had. So I started buying here and I kind of call this progressive exposure. I don't know if it's the exact, what you would call technically progressive exposure, but I think for me it is. So like, it came out of here. So I bought 500 shares here at like 1,080 thereabouts. Next day it went back, it went over this the high of that day, the previous day. So I added on another 450 shares at 1092. So I paid more, but it looked like it was going up. The next day it opened above this high of that previous day. So I bought more. I bought 400 more at 1,000, 1,108. I've paid up now 3 times to buy the stock, but it's moving in the right direction, right? And the next day, it once again crossed it again. So I bought another 400 shares. So now those are at 111. And so, I'm kind of loaded up on $1,000 stock. I've had like almost 2,250 shares. Now, what I did do here was I did put a little stop on these 400 shares. So that's kind of how I do it. So like I know how much exposure I have, and maybe I don't want a ton of it in case it reverses. So I did put a stop on this 400 shares, I think below this day's low. I got stopped out at 1,094. But I still had,
Quite a bit.
almost 1,850 shares of this still. And, this thing could move. This is pre-split. So it's split 10 to 1 late last year. So anyways, so I had 1,800 shares. It moved up a lot over the next 3 days. And so I sold 300 at 12, 1,211. So now I'm starting to get out of it a little bit. It went up again a couple of days. I didn't sell. I held it. It didn't, it opened up like towards a high and just never crossed it. So I started selling it again. And these are not just like I just sell 700 shares or I sell 300. Like I'm selling it during the day, maybe 50 shares, 100 shares, 75. And I'm kind of going down on the count of shares that I have. So 1244 was the highest I got. And then, I sold the rest of them out the next day when it opened below the low of that day, previous day. So I sold the rest of what I had at 1208. So, missed out on selling it at a higher price, but still, made money, got more money than I did what I paid for it. So, that's kind of an example of a stock that I would be interested in. It's a very high ATR. I don't remember what it was back then. It was definitely over 3 or 4%. It was trading over the 50-day. It was in a very strong group in terms of what was considered leaders in the market at that point. And if you look at the price action for such a large stock, I mean, it was trading very tightly. Like it wasn't loose. It started getting loose up here,
Hmm.
then it got loose around here too. But when you look at this before it started made this little move here, it was very tight, well controlled. And if you look down here as well, right, like as it was correcting, the thing I was looking at was, the volume, right? The volume was very, very low. It was below average volume. And so, it was a good setup. And, those are the kinds of trades that I like and look for. So those are kind of like beautiful trades if you can find them.
Yeah, and that's about a 15 to 20% move that you could just rinse and repeat a few times throughout the year.
Exactly, exactly. And if you've got, say 20 stocks in general that you're following at any given time, there'll be a handful of those that'll be able to do that kind of move. But, so I think if this was like this was probably a good, in the beginning of the year when you looked at my equity curve, this was one of the stocks that really helped me kind of get to that 30, 40, 50% return earlier in the year. And so, but those are the kinds of moves you need to find or kind of be able to take and do. But also, like that's a pretty concentrated, like that was probably like 70% of my account was in this during these, few days that I had it. But when I say concentration, that's kind of what I'm talking about is you need to be concentrated in your portfolio. You gotta be confident in what you're doing, but you got to also have your risk management there as well. So, like these trades that I made here, I know I said I put stops here. It doesn't mean I didn't have stops on these, right? Like I had
Right.
stops on these things that were below wherever I bought them. So they never hit and I was fine. This one hit because I took like out of this 800, I only put it on half. Half was at here and the other half I put a little bit lower.
Hmm.
So, this is kind of a good example, I think, of how you gotta be concentrated and get into those stocks that are gonna have those kinds of quick moves because it's a like a mega cap, if you will, that can move quickly and it's in the right group. And it was set up well.
Hmm.
Um, here's another one that I'll go through. So like this was Monster. or MicroStrategy, I guess. I was trading a lot of MicroStrategy earlier in the year as well. And then towards the end of the year, they started coming out with these leveraged ETFs for MicroStrategy. And so this was the one that I kind of jumped on. But here you can see, this was like during right before the elections when everyone was talking about Bitcoin and Bitcoin made its big move. And so, this was also just a great looking chart. Like if you look at how tight this thing is, right? Like just a very tight moving. It was set up nicely here. Very short cup and handle, but very tight moves. And so, I started to buy it. And this again, like this was a cheaper stock, like it was $40, right? $47. But this is really based off of what MicroStrategy is doing. So I'm watching MicroStrategy and seeing how that's trading. And when that makes a move over this, whatever its, line was equivalent, that's when I bought MicroStrategy or I bought this MSTX. And so I bought 11,000 shares at $47. When it broke above this horizontal line here. And then I ended up selling it the next day at $52, right? I sold the whole thing. Just that was a big move, 50 grand, 60 grand. Like that was a good 4 or 5 hour in one day, right? So I could have held it, I guess. It was a lot of risk probably, but I decided to sell it and take my money. And then I didn't do anything until it really started to move. And then I bought more over here at 5,000. I bought 5,000 shares when it was at 105. I sold it the same day. I sold half of it at 111, and then I sold the rest of it the next day at 145 before it made this big climax move. So I mean, I could have probably held this, but I was happy with the return. I kind of had a big position, and this thing was just so volatile. I didn't want to take a chance with it. So, just an example of how you manage your risk and just take those good little setups that you can get. Like this was kind of a nice 2 days of tight action. As soon as it crossed it, I bought it, sold half before the end of the day, and then held the other half, and then sold that as it made its move up.
And
So I mean,
just
that's a 40% move in 2 days. Like that was ridiculous.
yeah, and just to hear, your process, the previous turn. So before those two tight days, the previous turn off that pullback, there wasn't really a clear pivot that formed. So that's why there wasn't really a trade there on that pullback. Yeah,
On
just
this
in that
one,
area. Yeah, in that area.
yeah, you know what? This was actually pretty good. I think I could have bought it like right here.
Yeah.
Like I should have probably bought it here or here because this was a good inside day, very tight inside day. Like this would have been a good time to buy it. I'm not sure why I didn't buy it, but I missed it. Um, maybe I think it was close to the election. I was actually traveling at that time. I was in Ecuador, so yeah. So I wasn't in front of my computer. I was on vacation.
Yeah, it was yeah, I think that's right, the election time. That gap up might be on the election.
I think it was on the
Yeah,
6th. Yeah,
yeah,
I was out of the country, so that's why I didn't buy it.
yeah. And then question for you on that last trade. When you're taking some off into strength, are you looking at daily chart? Are you looking at the intraday time frames? Are you just looking at how much profit you have? How do you decide, all right, I'll take some off here.
Yeah, I mean on a trade like that on the same day, I'm looking at my profit.
Hmm.
And I'm looking at the risk and I'm looking at kind of the volatility as well. This was just super volatile. And I mean, I made, I don't know, like not a ton, but 7, 8% on it. And I was like, I'll take half of that and just book it and then let the other half go. So I had a stop underneath it
Yeah,
as well. So it was fine. If it would have clobbered and came back down, I would have probably broke even or made a little bit. So I was okay with that. And
yeah,
luckily it went up quite a bit the next day.
yeah. Because a bar like what happened 2 days later can happen, what in that type of volatility.
Yeah,
So
and I mean, if you don't see that bar, like if you kind of put like a piece of paper here, right, and
yeah,
you kind of look at it, you're kind of thinking, wow, it's already made this climactic move,
right,
and it's not closing at the top. It kind of gave up a little bit before the close.
right.
Take your profits and run. So yeah, in hindsight, yeah, I should have held it, but at the moment, like when you look at the chart, it looks just like, oh my God, this thing has really skyrocketed because it went up 30%, in a day, which is crazy.
Yeah.
So uh, another one that I traded, SMCI, not a great trade, but it was a market leader. So here, this is an example of like trying to jockey and trying to get into position and try to with a leader. So this was actually in March timeframe. So I bought like 500 shares and this was also back, this is before split. It was, $1,100, 1168. Bought 500 shares here, held it for a couple days, and then I got stopped out, right? Because it just took this big plunge. I watched it. Next couple days later, it kind of looked like it had bottomed. And so I bought 600 shares at $881. I rode it for 2, 3 days and I sold it at $965. So, I made like $80 on 600 shares, which was a decent return. And I got out of it. And I waited. I was going to buy it again, and it never really set up. And I don't have the chart on here, but if you go, I mean, this is like when it started to go back down, and they've gotten all their issues. And I was thinking this thing would break out and go to new all-time highs. That's why I had bought it here. It was like, I thought if it crosses this high of 120, well, back then, whatever, $1,230,
Hmm.
that I would add to my 500 shares on the breakout. But it never broke out from there, and just you guys know where it is today. It's trying to make a comeback, but it never really reached its all-time highs again after that. But just an example of, even if you get stopped out of a stock, and it's a leader, you can continue to look at it and just get back into position on it. For this was more of just kind of a little bounce trade, if you will.
Hmm.
But as you notice here, it never even made lower highs. This was the high, then a lower high, lower high. So after that, I just never got back into it.
Yeah. How much of your trades would you say are kind of pivot breakouts like we saw previously with MSTR, MSTU, MSTX actually, versus, that type of like bounce play where it's oversold, forms a tight range, looks to have put in an intermediate term low. Who knows if it's undercut, which it was later, and rallies, would you say?
Yeah, I mean, I'll do a little of both. I mean, where I really make the money is on the pivots, the
Hmm.
tighter pivots, like the ones I showed earlier. Like that's where you can really, this is really where you make your money. The other stuff is, it's kind of a fun, I don't want to call it fun, but it's kind of
Opportunistic. Yeah.
opportunistic. Yeah, if you
Yeah.
see it, there's different things. I do a lot of this stuff also, like on earnings plays. Like, if something gets clobbered, I might take it for a bounce play for a few
Few
hours.
points. Yeah.
Yeah, and see if you can get some money out of it. But um, typically, you don't really make as much money on those things. I mean, it's just you're trying to get a little bounce, and sometimes it works, sometimes it doesn't. So it's really not worth it when you really think about it.
Yeah. It's a little bit more counter trend versus going with the trend. So yeah.
Exactly.
Yeah.
Exactly. So yeah, I prefer the other ones. But like on this one, I thought it was just, it was a shakeout,
Right.
and this thing would turn around and go back, and then it just never did. So um this is like an earnings play. So this is actually kind of something I do like to do, which is post earnings.
Hmm.
So like I said, usually I don't hold over earnings and I'll wait until after earnings, but this is kind of these kinds of plays I like a lot. This was and this is kind of a 3M, which I typically wouldn't trade because it's not the fastest mover in the world. But I think this was during the market was kind of going through its correction last year in August. And so this was one that kind of looked pretty strong. So I bought it. It had good earnings. It pulled back. It had a nice shakeout. If you look here, it went to the top here. As soon as it crossed the line, the upper line of the flag, I bought a few shares, 2,500 shares, just held it for a few days. And then I got out of it right away because I think around that time the market started to pick up again. And so I started to focus on the leaders and get out of this kind of stuff. So this is more of just it was acting well in a tough tape. And so I thought I'd try it out and see. It made a little bit of money, but nothing too great, but these kinds of things, like if you're looking at a leader, this happens on leaders all the time. Like, one that I was looking at actually earlier. I mean, there's been a bunch, but obviously the market, tanked, and so nothing actually moved up. But like if you look at App Loving had a great earnings play. It was starting to build this out and, just got clobbered when the market started to fall last week. So that got clobbered. But what I like to do on earnings plays is especially I look for the earnings that are like spectacular, like unexpected, and especially from a stock that's not like already a darling, if you will, something that's kind of come out of nowhere, but has been trending up, good earnings, blasts out. If you look at like Spotify or Duolingo, they were like that last year, right? And so then you buy it. I mean, let the earnings happen. If it goes up and the volume, if you look here, is just like 4 or 5 times whatever it's been in the past. Um, you wait at least, 6, 7, 8, 9, 10 days, and then start following it real tight. Look for tight action. But typically you'll see them correct a little bit and then tighten up and then start to move out again.
Yeah, two I was watching before the market kind of rolled over. Pins and Bros. Bros more so is right near all time highs.
Right.
Nice little flag.
Yeah, that looked good. I mean, there's so many of them look good. I was like, wow, this is
Yeah, yeah,
awesome. And then everything went to hell.
yeah. I love the shakeout in this one, by the way. That MMM shakeout. That's great.
Yeah, I'm a big fan of that. Like if you see the shakeouts like in a chart that's forming a nice pattern and it's been tight, like that's something you want to look for because that's a good clue that this thing is, it could be ready to go in the next, week or so. So I like shakeouts and patterns. Um, the other thing I like to do is I do a lot of index trades. I kind of mentioned that, like, the T triple Qs I do a lot. And I like to use index trades more when the market is, tanking like it is now. I'll start doing these. I'd rather get into an index trade than I would a stock trade typically. And so what I like to do is the teachable cues is really what I focus on. And there's a few things I look for. So you can see I traded this like 3 times last year. And what I look for is I look for spikes in the volatility. And once we get those kinds of spikes and you see the index kind of tank down and then kind of bounce back up a little bit, that's kind of your kind of clue to potentially, we could be at the bottom. So what I look for is, A is the spike in the volatility, but what I want to see is I want to see the volatility close down for the day, right? So it spikes up, and as it's spiking up, it's usually the best thing is to see it spike up in the morning, the first thing. You get markets tanking, VIX goes up. And then as the day progresses, later in the morning, typically you start seeing the VIX start to pull in. And that's kind of when you would want to start buying something like this. You're not going to buy it at the bottom, but you're going to start buying it on a pullback, on a second high or low or something like that on an intraday. That's when you would start to maybe nibble at it and then put a stop at the low. And it's kind of a little bit of a less risky way to kind of get some good bounces, and it's more than a bounce. I mean, you can make some good money on these, and I do this quite a bit, especially like when the market's not doing well, like it is now. And then the second thing I look for is I look for the put call to spike to at least one, well, zero point 0.9 or higher. I mean, I prefer it to be over one, but it just really the put call ratio has been really low over the last, I'd say, several months. It just hasn't really spiked that much, but we did get a little bit of a spike today at a 0.9, and then, obviously the VIX spiked up a little bit too, but still not to what you would like to see. But these are just some examples of where I bought it. I'll buy a lot of shares, like I'll buy 20,000 shares, and it'll pop, you know, this popped up $5.50, I think. And so, that's some pretty good, returns on that in a few days. Here I bought 6,500 at, $50. I bought a little bit up here on this first day, because it did, it spiked up, but it wasn't really the huge spike I was thinking would be there. It came the next day, and then I kind of loaded up and then sold out again, with about a 10% return in 2 days. And then, I did a similar sort of thing late in December last year as well. Um, I bought it at 81 and sold it at 85, but I bought like 21,000 shares. So it was a pretty decent trade, swing trade.
Where are you placing your stop on these type of trades? Is it just usually the low of the day, intraday, higher
Yeah,
low?
we
Yeah.
usually I do. Well, it depends, either I'll do, especially what I like to see is I like to see the market open up down, like way
Yeah.
down. And then I'm kind of watching it on the intraday, like for the 5 minute chart and stuff, and see kind of how it goes up, how far it comes down. And then typically what I'll do is I'll either put like half my stop on that first low, the opening low, and then the other half stop on the low that it just made. And then just kind of see kind of where it goes from there. But
Yeah.
typically, if you get this kind of volatility and you get a big spike in the uh, put call ratio in the morning, like a pretty good indication that, and especially if the VIX starts to fall, that's the key is that you want to see the VIX start to fall as the day progresses. Like today, we kind of had that, but not really.
Yeah. So to hold to the next day, do you kind of need to see that VIX fall and also I assume have a pretty good cushion end of day to hold through?
Yep, yep. I mean, I want to see the VIX fall, and if it doesn't fall, maybe I'll like lighten up a little bit, and then just wait and see. But I would definitely not buy it if you look over here on this day, and this is kind of hard to see, but the VIX like spiked up, but
Right.
it closed at the high of the day, so not a good day to buy it. Like that would have been way too premature. So you want to definitely see the VIX come back down after it does this spike and close on the low or towards the lower half of the range to get in on the trade or to keep the trade even.
Yeah, and like you said, the when this happens with a gap down, that's kind of almost easier to interpret than when it's just kind of breaking lower. Right now we're recording this on the Tuesday night for everybody watching this on the weekend. We've had three straight strong pushes lower. You know, potential scenario if we gap lower, that would be a potential scenario that you'd probably be watching to see if the VIX is spiking, all of that, all these factors to potentially put on another trade.
Yep, exactly. I mean, I did take some today, and I'm holding overnight because
Mhm.
I think it's not the ideal setup, but it's. I mean, we've gone down, significantly
Yeah,
over three, like 5, 6, almost 6% now. And we didn't close at the low of the day, which was kind of a good sign. It sounds like been some decent earnings this evening as well. So we'll see what happens tomorrow, but I think we're getting close to some sort of a temporary low here. So we'll see how it goes. But also when talking about market cycles and things like that, right? Typically, the last couple of weeks of February are usually very, very weak, anyways. So these are probably the worst 2 weeks of the year in terms of market cycles, especially post election or first year presidential election. So, just some things to kind of keep in mind as you're trading. And, usually March is a pretty good month, at least the beginning of it. So, I'm thinking we get some sort of a bounce here um, over the next few days.
yeah. Well, everybody watching the future will know how it
How it
goes.
turned
So,
out and how
yep.
badly I
Yeah.
set myself up with that.
Yeah, on a trade like today, did you size it up pretty big, or was it more like a test trade versus if we gap lower tomorrow and then put in kind of similar to the first one you talked about, you might go a little bit larger. Is that correct? Or yeah,
Yeah, well, I sized up quite a bit because the market in the
yeah,
mid-afternoon, like coming back. So I sized up pretty nicely. But towards the end of the day, I kind of sold some out. And so, we'll see kind of how tomorrow opens. So, I mean, there's two big events, right? NVIDIA earnings tomorrow and then on
yeah,
CPE on Friday. So those are two big market movers. So I kept enough money that, I can kind of adjust if needed or add to it if we get that sort of a big whoosh down tomorrow or Friday.
right, perfect.
But the other thing I was just gonna say I want to mention is that with indexes, like we're not in a bear market, and I don't think we're going in a bear market right now. So for me, like to lever up with the Qs or the indexes, like I'm pretty comfortable doing that. Like I don't really have a lot of I'm not too nervous about it because we're going to bounce. I mean, we're just way oversold already. And so we will see a bounce. And so, yeah, I may not get the big move that I'm thinking I'm going to get, but I don't think I'm going to lose money either. So, um, famous last words, I guess. We'll see how it turns out.
We'll just have to wait and see. Yeah.
Yeah.
But yeah, thanks for walking through that process because I think a lot of people, I talked with Viva Jha. She was another person who
Yeah.
trades the cues and in a similar way, but it's very cool to hear the things you're watching and what you need to see for the trade to progress, all that. So thanks for walking through that process.
Yep. All right. So let me go through. I got a couple more things to just go through. So growing your account, right? So those are some examples of some trades. And I think the way I like to look at it is, I play poker as well. Um, uh, not a ton of it and not professionally. So, but you got to continue to chip up your account, right? Like, I mean, it's not going to happen all at once. You got to just, it's a continuous dance between like your account balance and managing your risk and the trades you're going into. So you're just always looking at kind of what's happening, and it's not like a hard and fast rules like buy this, buy that, buy 20% of this, 25%. You got to figure out your own style, and you got to be very aggressive when the market's in a giving mood. And that's when you grow your balance, right? And you can't be scared of taking advantage of those opportunities because they don't happen all the time. And you need to be confident in your abilities. And then, when the market is choppy, you got to adjust your expectations. So, in an aggressive market, when it's doing well, like getting a 4 or 5 R is that might happen every 2 out of 6 trades or 7 trades, right? But when the market's choppy, if you can get 1 R, you're probably happy. So you got to just
Right.
adjust your expectations of what you're trying to do. And when the market's choppy, you definitely don't want to be gung ho going all in unless you've got some good risk management that you're using as well. But at the end of the day, it's you're looking at a lot of different variables and factors and trying to just chip your account up as the year goes by. And don't get, be patient. I guess that's the big thing.
Right.
My learnings from 2024, I think I could have done better if I was a little bit more patient. And that's just, part of my personality. And that's why I trade a little bit faster because I think I need to get in, I need to get out. And I need, that's just the way I am. I think being in cash is okay, waiting for the fat pitch. That's something that I'm working on a little bit more is that to be in cash for several days, a week, 2 weeks is okay. And that's something that I don't do as much as I should. Longer holding periods, especially when the market is doing well, I think is a good thing as well. Um, that's something I need to work on. And when I say longer holding periods, I mean like for me, it's probably like 2 weeks, right? Or 2.5, 3 weeks. Don't get too aggressive, especially around key events like Fed Day, CPI, PCE, et cetera. That kind of hurt me. It's hurt me a few times. Like I think I talked about it in 2023. I got burned in 2024 towards the end of the year with the Fed's hawkish stance that came out of nowhere. And then, the last thing is I think, always continue to study charts, right? Charts are something that you should always continue to look at and study. And with that, I want to just say, hey, thanks for the guys doing the model book. I think it was awesome. When I say study the charts, study the winners of the past. Like that's the best way to learn um, how to trade in the leaders. Get your eyes trained at what these things look like before they broke out. Last year, what were the clues that they were giving, right? You look at the volume, look at the moving averages, how were they lined up, and look at the price, right? What was the price doing when these things broke out and made their moves? And what I really like about this is that, this, especially this model book, since it's from last year, is that these are all current leaders, right? And if you go through this book, like they were leaders, hopefully they're still leaders, but they may be setting up now, especially with this correction, to make another run,
Right.
in 2025. So I think it's a good book to have and to reference and to learn from even for this year and use those same charts or same names and see if they can set up again for this year.
Yeah, and what's cool about this is like we kind of marked that up from probably a little bit longer term perspective than what you trade, but the entry points are probably the same if not similar, and then you might trade in and out in the trend that we're trying to hold, over the 21 day simple or something like that. So I
Exactly.
think I think whether you're a swing trader, very fast swing trader like yourself, or more position trader, I just echo what you said. Studying the leaders from last year, from the previous years, and actually building a model book for yourself. I think that's probably the best way to study. It will help you so much and really help you spot things in real time that you're applying from previous winners. So yeah, this is great. I'll include the link down below to this one, but I think if you can make your own, I think that's probably even the best way, and then you could compare yours to ours, and that's the best of both worlds.
Yeah, I mean, it's interesting you say that because as I was preparing for this interview, I was kind of going through my trades from last year, and I just noticed a lot of the same tendencies that I had in terms of what I was buying, where I was buying it, and kind of some ideas of how I should be changing some of those things and maybe getting better results as well. So it's very helpful to just go through your own trades and see kind of what you did, where you bought, and fix those tendencies that you might have.
Yeah, for sure. And I think at the very beginning you mentioned wanting to talk about that December drawdown a little bit. Was that just the Fed's hawkish stance that kind of caught you off guard, or was there adjustments
Yeah,
that
I
you
mean
did
it was
make?
it was a few things. One is I was traveling, I was out of the country, and I was kind of doing this at like 2 a.m. or something like that because I was on the other side of the world. But yeah, I mean, especially when there's big events coming up like that, you need to definitely be prepared for your portfolio. And you never know when these things might happen, right? Like
Yep.
you just never know. Like nobody was expecting it, and that's why the VIX just skyrocketed that day, after his comments. But they just took a stance that was very much not expected by anyone, by the market, and so that hurt me. I got creamed a little bit, and I shouldn't have probably been as aggressive as I was, especially when I was traveling, and especially when that announcement was coming out at like 2 a.m. in the morning. So just little things like that. I mean, you learn. I mean, it hurt, but it was a good learning lesson for me. And we all kind of go through these things where we get nicked and bruised and cut up a little bit. But it hurts, but it's a lesson as long as you learn from it and don't do it again.
Yeah, perfect. Yeah, to Deepak, this has been excellent. Thank you so much for putting this together. Do you want to talk current markets a little bit? If you don't mind bringing up a chart, maybe we could talk through kind of what the indexes and maybe a few key names are doing that you're eyeing.
So yeah, so I mean, like I was mentioning, current market, we're going through a pretty rough few days here. Like if you look, we've come down almost 5.7% or so in like 5 days or 6 days. The hot stocks, the leaders have just been crushed, and so it's a good cleansing. But if you look here, this was the support line for the Qs, and it broke underneath that. And like I said, we it was kind of a weird thing. We didn't just come out of the gates down today, but it was kind of a drip. I mean, and it picked up momentum. But as you see, like we closed, we didn't close at the lows, which was good. So we'll see. Kind of, I know there were some earnings that came out that were pretty decent, at least in the software arena,
Mhm.
and so that's kind of helped the market kind of close. This is like real post-market stuff as well. So. But yeah, I'm looking at this and I'm thinking, okay, if we can get back above this line tomorrow, hopefully, or in the next 2 days, you don't want to be living underneath this too much. It's got to be able to get back over that resistance line. But there's a few stocks that I think are doing fairly well that I'm kind of interested in, that I think may have bottomed. One that was a leader that got crushed here was Reddit, and I just like this is another pattern that I kind of like is this kind of I call it like a pipe pattern where you see these two lows just hanging out by themselves and they're about the same height and size. I'll be watching this tomorrow to see if it goes over, if it closes over this last high, I'll start to pick some up tomorrow if it goes above this and kind of, work it for a bounce play. But it's a leader. I mean, I know they had some issues with what they said in terms of user accounts, but I think those were temporary from what the company said. But no one was listening just based on what was going on in the market. So I think Reddit's pretty decent. The other one I really liked a lot was I think Expedia is doing well. I mean, if you look at this stock,
Mhm.
it's hanging in there for this big pullback. It's hardly moved, right? And it's closing the last 2 days, which have been pretty brutal, closing at the top of the range, right? So I think this stock is looking pretty strong. And travel stocks in general have been doing pretty well. I know RCL got hit a little bit. Um,
But it's holding after that gap down, which is kind of interesting. Or not gap
yeah,
down, but bad bar down on
yeah,
volume. Yeah.
exactly. Um, so that was interesting. The other one I liked is oh, this was the other one I was going to talk about was
Yeah.
Lilly. This looked really good. I didn't buy it because they had earnings today. But this was looking really, really good based on what was happening in the market. Like, and it did very well today as well, right? Because their earnings were decent. So this was a good looking stock, especially based on this market conditions. Costco, I think, was really, really good. And these are ones I looked at yesterday. So like I looked at this yesterday, and once again, if you look, this is kind of that
Right.
pipe pattern or the which I kind of like. And so it opened right above it, which was kind of a good indication. I didn't buy it, but this is a good pattern I like to look for, which is, two of these bars close together and it opens above it. So that was would have been a good trade. Um,
Just a clarification on that. Do you like a gap above those highs, or do you prefer maybe a an open within those ranges and a push higher through the highs?
Yeah, I mean, I prefer like if it would have opened right at the top of this
Right.
bar versus a gap over, which is what it did. If it gaps over, I want to see it come down and close that gap,
Hmm.
which is how it opened and came down and closed it and then moved up the rest of the day. So it would have been a good trade. And I think it just looks strong. I mean, I think it broke out, came back. It's a higher low. It never came back to test the breakout. And so, I think this is going to go much higher. It's looking good. The other ones that are looking good, which, I thought was Visa. I mean, Visa was looking good. It didn't really pull back too much from the highs. Not really a fast mover, but it's a good looking stock. Low risk entry, yesterday. And these are stocks I'd written down yesterday. So that
Right.
MA was another one that looked pretty good as well. So both these are doing well.
Yeah. And those flagged ones, those are kind of your go-to universe right now, the ones you're
Yeah, I
focused
like
on.
these. I mean, yeah, I mean, if you look at it, right, I mean, it's got a really nice flag. It was fairly tight. Today was a little bit loose, which I don't like, but one to keep an eye on and see kind of how this thing moves.
Oh, I meant in your watch list, the flagged ones.
Oh
Yeah, over there.
yeah.
Yeah.
Oh yeah. Sorry, yeah. These are ones that, and these are, I need to update these, but these are from like last week probably.
Yeah.
But these were the ones that were out, were kind of the momentum stocks that I was watching, and they've all gotten clobbered, obviously. So yeah, it'll be interesting to see. Netflix also, I think, it was holding up pretty well. I was pretty impressed, and then it just, got clobbered here, and we'll see, kind of how this thing recovers from here.
Yeah. Perfect. Well, Deepak, thank you so much for your time again. I'll just stop your share here. Are there any kind of key principles or key takeaways that you want people to have from this podcast? With some important lessons that you learned in 2024 that you're going to apply to this year in the contest. Which, by the way, best of luck. I know you'll do well, but hopefully you kill it again. But yeah, any kind of last words that you'd like to share with everybody?
Yeah, I mean, I think, you know what? I think few things. One is I think believe in yourself, right? Believe that you can do it. Learn from folks that have been successful, like Minervini, Chuck Pattern, Dan Zanger and those guys. You guys have great people on and are interviewing, some of the leading, traders that have done very, very well. I think everyone's got their own style, but the more traders you listen to, you kind of hear like what they do. There's got to be, things that you'll pick up from each of their conversations. But I think the interesting thing is as you start listening to all these, the general themes are very, very similar at a high level, right? Like the
Right.
things that they talk about to be successful are very, very similar. So I think, putting some time into those sorts of things to learn and to study is very good. But like I said, the only way to really do it is start doing it yourself and learn your own tendencies and your personality and your trading style. I think that's really important because you're never going to trade like me. You're never going to trade like you, Richard, or Stan or Mark Minervini or anyone else or any of the market wizards. Everyone's different. And so you learn based on what your style is and what your situation is.
Awesome. Well, Deepak, thank you again for your time. I really enjoyed this. Always great chatting with you about trading. Congrats again on last year, and again, best of luck this year. To everybody watching, I hope you guys really enjoyed this. I know you guys took a bunch of notes, and if you didn't, you got to watch it back and do it all over again. But thank you so much for sticking with us. If you enjoyed it, please go ahead and leave a like down below. Deepak, I'll link your Twitter down below. Is that the best way for people to get in touch if they'd like to? Okay,
Yep,
perfect.
yep, that'd be great.
Cool. Awesome. Yeah. So,
Awesome. Thanks, everyone.
yep. Thanks
Thanks,
so
Richard.
much and have a great rest of your day. And we'll see you guys in future videos. Take care.